I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up this hour, Sam Bankman-Fried is taking live questions in the wake of the FTX contagion. We'll bring you the headlines as we get them.
And the tragedies of TikTok. Bloomberg's Big Take investigates how trending challenges on the platform are turning out to be deadly for some children. We discuss why the world's most popular app isn't doing more to protect them.
Meanwhile, the CEOs of Earn Your Leisure are here to explain how their financial literacy media platform is selling out venues from MSG to the Royal Albert Hall. But first, let's check in on these markets. What a day for tech stocks. All in all, we're having our highest read on the S&P 500 since September the 9th. We're up for the biggest day since November the 10th, which of course just shows how volatile these markets continue to be. S&P up more than 3%. The Nasdaq 100 getting up a lofty 4.5%. Just check out the chip stocks up more than 5.8%. The reason why? A more dovish interpretation, at least, of one Fed Chair Powell. He was at the Brookings Institute talking about the direction, the pace of rate hikes. And it looks as though that pace might quieten a little bit. Look, the terminal rate is still going to be somewhere above 5%, so the market is pricing in. But at the moment, there seems to be some relief that maybe those pace of rate hikes, at least those 75 basis points ago, might be dialing back a little bit. Let's check in on what's happened, because this is a story of macro impact on tech stocks. The reason that we're seeing a lofty push higher in terms of valuations is because of borrowing costs. Just focus in now on the two-year yield, which we saw really pull back on the day. And big moves down 16 basis points for a two-year yield. That really is the reasoning behind the buying of tech stocks at large today, Ed.
Yeah, Powell clearly having an effect on individual movers as well. You look at some of the biggest points gainers on the Nasdaq 100, Apple being a prime example, really pushing higher after Powell's comments. But also in the news flow, right, we saw a tweet from Elon Musk suggesting he got given a tour by Apple's Tim Cook of the Apple campus not too far from me. Really interesting. DoorDash up 9% after a Bloomberg scoop that it's cutting its workforce by 6%. Financial discipline. CrowdStrike at one point down the most on record, but closing down 15% after fourth quarter forecast revenue that was way off what the street was looking for. And also interesting to look at crypto-related stocks pushing higher, as actually we see a little short-term recovery, at least in some digital assets. Bitcoin's been interesting. We're back above 17,000 US dollars per token. It's interesting to note we breached that before Powell made those comments, but after Powell made those comments, we continue to push higher on Bitcoin. Caroline.
Certainly, and we keep an eye on all things related to Bitcoin, crypto, because BlackRock Chief Executive Larry Fink saying earlier today that most crypto companies will probably fold in the wake of FTX's collapse. This, of course, during the interview in the New York Times Dealbrook Summit. This is, of course, now we see that Sam Bankman-Fried has taken to the virtual stage, appearing at the event as we speak. I'm pleased to say Sonali Basak is here with all the latest. Some headlines coming from that event. Sam Bankman-Fried saying to his knowledge, FTX US platform is solvent, and overall that he made a lot of mistakes as the CEO of FTX.
You have him first answering a question, or early in the program answering a question by Andrew Ross Sorkin about a gentleman, a letter. He was reading a letter from a gentleman who lost his life savings. And then he asked Sam Bankman-Fried to answer to that letter. And that's when, Caroline, he had said that FTX US, to his knowledge, was solvent, and you could withdraw today if they allowed for it. Now, he's starting to talk a little bit about FTX, the international business. We know he also had that interview with Axios over the last 24 hours or so, where he talked about getting those licenses around the world very quickly, and the issues that have resulted from those international licenses that have been accumulated so quickly. I would also say that, you know, he started off with some of the things that he has said before. He is deeply sorry that he had wished he had done certain things differently, but it was only a month ago when he was excited about the prospects for FTX. So the tone he's been taking here is pretty solemn, pretty somber, and apologetic, I would say, is the first way he's coming off the bat.
Yeah, there's certainly a level of contrition from Sam Bankman-Fried, right? As you know, he says that he has mistakes, that if he wished he could go back, he could change. We're in the early exchanges, Sonali. We'll continue to bring the headlines as they cross. But what are the key questions that we want answered by SBF on stage?
Andrew Ross Sorkin had acknowledged that the money here, the dollars, where everything had gone, they might get into here the details of all of those transactions. Let's see how deep they get. But certainly they are starting with a bigger issue at play here. Will we get those answers about where the money went, particularly that $8 billion hole in their balance sheet?
Shonali Besek will keep us abreast of what's happening in that particular interview. Meanwhile, though, we just want to turn our attention to a huge story here on Bloomberg News today. Security concerns of a different type, TikTok. They keep growing. And South Dakota is acting on it, banning TikTok on its government employee devices after the governor said that the social media app's ownership by a Chinese company poses a national security threat. This comes as today's Big Take is out too, and on different kinds of security concerns, this time surrounding children's safety on the platform. It was the front cover of this week's Business Week and was a real deep dive into some particularly heart-wrenching stories, and I must warn you, involved the death of some children. Bloomberg's Olivia Carville is with the story and joins us now. Olivia, it was a devastating read for anyone with any emotion, but I'm sure also of executives that lead a business such as TikTok that in many ways get singled out because of certain trends that occur on the platform that children who are too young consume and then are in some ways affected by. Just talk to us about how you came across this story and the reporting out of it.
Yeah, I mean, we've been seeing cases of children who are too young to be able to access social media platforms having devastating consequences. Last year, we saw Frances Haugen testifying in Congress about Meta and Facebook and Instagram and the mental health harms that it's been causing teenagers, particularly young girls. I also noticed that we were seeing a number of children dying participating in trending challenges on platforms. And I wanted to get a sense of what happens inside some of these companies when the worst case scenario occurs. So when an 8 or 9-year-old child dies participating in an online dare or a trending challenge, how does the company respond? And is social media to blame in any of these cases? I think that question of liability or responsibility over these deaths is a really big one, and we've seen lawsuits filed in the US recently trying to raise that question in the courts.
Olivia, you outlined 2 specific cases of children who died carrying out something or emulating something they saw on the TikTok platform. I would encourage our global audience to go and read that story, but you also report on the response from within TikTok. Sources at the company explained to you what executives did next. Could you talk us through some of that?
I was connected with more than 24 individuals who worked on TikTok's trust and safety team to really try and get a sense of how TikTok internally handles these situations. The company has a trust and safety team, thousands strong. They have about 40,000 content moderators looking at the videos that are posted on TikTok on a daily basis, taking down anything problematic or potentially harmful. They have strict policies and guidelines set up to protect children. And so the platform has created a number of safety mechanisms to try and keep kids safe, but children are smart and they know how to sidestep those safety restrictions. So in terms of the videos I was seeing more recently that have been linked back to the Blackout Challenge, kids have started to misspell the words or come up with different hashtags or different code names in order to avoid those safety restrictions and keep this challenge trending.
We, interestingly, went to our own audience via Twitter and asked them, look, how can social platforms, such as a TikTok, become safer? Interestingly, the majority, but it's only 41%, 42%, called for more regulation. Age verification came in at just 24.5%. What's notable is the statistics in your story. More than 70% of US children have a cell phone by the age of 12. Half of all kids from 8 to 11 in the UK are viewing TikTok content daily. Is there a technological manner in which these sorts of platforms, such as TikTok, can make sure that someone who's claiming to be 13 is actually 13?
Yeah, and that's a really important point to remember, that children who are 13 and younger, or children who are under 13, are not supposed to be on these platforms legally. There's laws set up to prevent kids from being on platforms like TikTok. But unfortunately, it's very hard to figure out how old a user is. How do you tell the difference between a 14 and a 15-year-old? It's hard for humans to do that, let alone to train artificial intelligence to do it. So there have been companies that have recently been set up trying to tackle this particular issue, the issue of age verification, which is something that all social media platforms are facing. And these third-party providers are offering software that can actually tell when it's a child or when it's a teenager, and they're relatively accurate. So I was talking to a number of these providers, trying to get a sense of how does the software work, what can you actually do, and unlike facial recognition technology, which is trying to identify the individual in the photo, this software is just looking at that face and guessing an age. I sent them a video of a 9-year-old girl who died participating in one of these challenges on TikTok, and it took that software 3 seconds to detect her age. It said she was 10 years old, and she died 3 months before her 10th birthday.
All right, Bloomberg's Olivia Carville, just excellent reporting. I encourage the audience to read that on Bloomberg.com, The Terminal, and in Business Week. Just great detail on what's happening with the TikTok platform. Coming up, what Apple CEO Tim Cook will be doing in Washington. This as Apple is navigating tough waters in China. We'll bring you the latest. And before we head to break, let's take a look at Salesforce, how it's trading in after hours, down 6.5%. Co-CEO Brett Taylor leaving the company January 31st, and a tepid forecast for the current period that came at the low end of analyst expectations. This is Bloomberg.
Apple CEO Tim Cook is doing the rounds in Washington, meeting with top Republican lawmakers as the company seeks to forge ties with the GOP ahead of the party's takeover of the House early next year. Now, this is all according to people familiar with the visit. Interesting timing, given the recent tirade from one Elon Musk about Apple's dominance via its App Store, and all the more intriguing as Elon Musk suggested he was actually at Apple headquarters today with Tim Cook. Our very own Mark Gurman is here with the latest. Intriguing indeed. Just talk to us, Mark, about, well, first and foremost, the visit itself from Tim Cook.
Yeah, clearly Cook is having a very busy week. He's scheduled to meet with some top DC lawmakers. Obviously, he has Elon Musk in Cupertino at the Apple Park headquarters earlier today around lunchtime. They went through a walk through the campus. Obviously, we all know what they talked about. I'm curious to know if Musk asked for special pricing on the App Store. But in terms of this DC meeting, he's scheduled to meet with Jim Jordan. He's scheduled to meet with Darrell Issa. And some of these lawmakers that he's meeting with, they're going to be at the top, right, of the GOP when they take back the House next year. So it's important for Cook to rebuild these relationships, given the changeover happening in Congress. Obviously, Apple's going to continue to be under a lot of scrutiny, right, whether it's the Twitter situation, free speech, content moderation, whether that has to do with the App Store and the fees that, you know, some developers aren't happy with. Obviously, we had the Epic Games trial several months ago, but that still remains ongoing. Privacy and security, the environment, clearly many different issues that both Apple and Congress are overlapping with and are probably going to continue to discuss for years ahead. Obviously, there's the efforts to sort of rein in on tech giants overall. So it's important for Cook to get in there and have these relationships with the top lawmakers.
Mark, we should point out, we asked Apple if Elon Musk was telling the truth or whether he was in Apple HQ or not. My understanding is Apple didn't respond to that request. Maybe you can clarify. The other big story, of course, is China and what's happening in Zhengzhou. Give us the latest around iPhone 14 Pro production there.
Yeah, regarding Musk and his visit to Apple today, I have no reason to believe that visit didn't happen. I mean, I think it's accurate. It looks like Tim there, and from what I've heard, you know, Musk is there or was there earlier today. I know Musk likes to prank a lot on Twitter and, you know, tweet things that maybe the public wouldn't necessarily believe or it's not entirely accurate. But I don't think this one was inaccurate at all, to say the least. In terms of the iPhone 14, we're hearing that there's going to be a unit decline from the original 90 million to something north of 80 million. That's a combination of the riots and the COVID impact on the iPhone 14 Pro factory, but also people not buying the regular iPhone 14 and iPhone 14 Plus, the Pro models, in quantities that Apple maybe initially anticipated. But I think things are starting to turn around. I actually ordered an iPhone 14 Pro from a carrier, Verizon, earlier this week, and that's scheduled to arrive in mid-December. So depending on where you're buying from, I think things are they're going to improve the next few weeks.
All right, Bloomberg's Mark Gurman, thank you very much. Let's stick with Apple, dig into it all with Shannon Cross, IT hardware analyst at Credit Suisse, who covers Apple, among other things. She joins us from the Credit Suisse Annual Technology Conference. Shannon, I was reading your research, and you point out that if you had tried to buy an iPhone 13 at the same time last year, you'd get it much more quickly than if you tried to buy an iPhone 14 Pro model right now, Christmas period 2022. What's going on for Apple?
Well, I mean, clearly there are issues with production, and everybody's seen the videos and what's going on in China right now. I think Apple is working as quickly as they can to help Foxconn and Hon Hai basically restart production. I would say they have people on the ground that they're trying to help the employees and fix some of the issues. But Apple did put out a press release a few weeks ago, basically saying there was going to be some challenges with supply. And, I think what we're looking at basically is a situation where right now, if you order on apple.com, you're going to get your phone before the end of the year. So I'm watching to see when that actually shifts into January. And at that point, then that revenue is not going to actually hit in the December quarter, and it'll actually shift over into the March quarter. I don't think at this point we've really seen demand destruction.
Yeah.
I think that the bigger issue that you're seeing right now is just a supply issue.
You have an outperform rating on the stock, $184 price target. That's well above the 148 where we are now at the moment, Shannon. Just talk to us about the risks to the upside or the downside here. Is it more likely, are you worried not only about the supply chain headaches, but sort of the PR hit that a company such as Apple has by having so much of its supply chain in China, and indeed the sort of human cost of that? Or is that ultimately not a key concern for you?
Well, look, I think it's always been a risk for Apple. I mean, Apple has a very good relationship with governments around the world. They employ an awful lot of people. I think there's like 1.7 billion people, or billion, that would be a lot, 1.7 million people that are employed around the factory area. And it's not just the factory, right? It's the shop down the street that makes the widget that goes in the phone, and then the one that makes the glue. And they have a really strong ecosystem of production, and it is a risk, because whenever you have something in one area, you're going to be susceptible to issues. But I think Apple has shown during the pandemic that they were able to come in and with their partners and manufacture. They have a lot of partners that help them with the manufacturing. They are shifting some manufacturing to India, although that will take a long time. I mean, the way it's been described is, they've spent 15 years building a supply chain in China, and you can't just, rip and replace that overnight. And I don't think they would want to. I mean, China is an important market for them as well. So, from the standpoint of the Chinese government, it's important, and then to keep people employed. And then from an Apple perspective, obviously they're pretty reliant at this point.
Shannon, we've been excited to have you on because you cover the world of hardware, but that encompasses many companies. A name that's jumped out at me is HP Inc., and up to 6,000 jobs cut over the next 3 years. What's your assessment of job cuts in the world you cover, and also just financial discipline in response to kind of a slowdown in the end markets?
It's interesting. So this is the Credit Suisse. It's our 26th annual conference that we're holding out here. We have 1,300 attendees. And actually, I interviewed the CFO of HP today. So, I think HP is in an interesting situation. You've come out of the pandemic where PCs were elevated and everybody went out. You had a hybrid work, and so people needed a PC, they needed a printer. And now we're in a bit of a situation where they're digesting things. But the other thing to keep in mind with HP is that they have certain pillars of growth that they're looking at. And one of that is peripherals. They bought Poly. It closed a few weeks ago. You've also got 3D printing. They're focused on a number of different areas. And one of the things that they are doing with this restructuring is really trying to position all the systems and their sales strategy and manufacturing such that they're able to support where they see growth coming from in the future. Because, I think they are cognizant of, and frankly, investors are cognizant of the fact that printers are in secular decline. I mean, they can manage the secular decline, and they may be a share gainer there over time. But, you've got that. And then PCs are they're going to be in a cycle. We had a big up cycle during the pandemic, and now we're in a digestion phase. So, I think mature tech companies, which I tend to cover a lot of, are constantly trying to reduce costs, optimize, and manage for the future. Because again, when you don't grow very much or you start to decline a bit, the way to drive incremental cash flow and incremental earnings is basically through, cost reductions and optimization of your infrastructure.
Talk to us among these companies, Apple, Dell, Pure Storage, a lot of these companies you cover. We talk a lot about on the show the geopolitics, and of course, Apple has been swirled in that when it comes to China. Just talk to us in 30 seconds about the App Store. How worried are you about the revenues from that?
Well, I think the App Store, there's one of the reasons why it outperformed during the pandemic was because people were home and people were playing games, and that's a good way that they generate revenue. We're no longer home playing games. I mean, this conference that I'm at, it's packed with people. People are roaming around. We're, interacting. We're traveling. We're doing other things. The other thing, on an offset to what's going on in China right now is that you do have a situation where if people are at home and they're, because of COVID restrictions, we may see a little bit of an upside there. So, I think
Shannon, I'm sorry to cut you off. Shannon, we will have you back very soon, but we got to head off. Shannon Cross, IT hardware analyst at Credit Suisse. Thank you. Coming up, Treasury Secretary Janet Yellen says she misspoke when she downplayed the possibility of probing the Musk Twitter deal. More on that next. This is Bloomberg. Time for Talking Tech. Elon Musk's purchase of Twitter could be subject to a government review after all. Treasury Secretary Janet Yellen says she misspoke earlier this month when she told CBS she saw no basis for scrutiny. On Wednesday, Yellen told an audience at the New York Times event that if there are risks with the deal in general, actually, quote, it would be appropriate for CFIUS to take a look. CFIUS, that's a reference to the Committee on Foreign Investment in the US, which Yellen leads. The panel of government officials reviews investments in American businesses by foreign buyers and decides if there's a national security risk. Now, foreign investors did back Musk's deal to take Twitter private, and a potential action by CFIUS emerged due to concerns over how Musk's many business interests overlap with US national security priorities. Yellen also stated, by the way, she couldn't comment on specific reviews or what was specifically being looked at, Kara.
Great update in terms of the ongoing narrative around the Twitter deal coming up. We're going to talk a little bit about deals, but of a slightly smaller kind. The Amelio family is branching out from TikTok and reality TV into funds investing in women-led startups. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, alongside Ed Ludlow in San Francisco. Now, the D'Amelio family of TikTok fame has announced their first investments from their family's venture capital fund. It's a $25 million fund, recently invested so far in 4 startups, backing mid-stage, high-growth tech businesses, but they're primarily started by women and minority founders. Doug Rennert is with us. He's co-founding partner of 444 Capital. And talk us through, this is about what you have said, combating systemic inequities in the technology and business world by funding the next generation of female and minority entrepreneurs. Talk to us about the brands that you've picked, the companies you picked, and why they stood out for you.
Yeah, that's right, Caroline. We actually have backed 6 startups to date. We launched a little over 2 quarters ago. And we just announced those 6 startups, and 4 of them were backed by women founders. When we teamed up, myself and my co-founding partner, Jeff Beecher, with the D'Amelio family, we really felt it was important to use our collective platforms to boost both women and minority founders. They've had a tougher time and have been underrepresented for years. And that's what we've set out to do. It was great to see that of the 4 women-backed companies that women-founded companies that we backed, all 4 of them had founders picked recently on Inc. magazine's top 100 female founder list. So that was great validation that we're picking remarkable women founders.
Doug, I want to point out that 444 Capital runs the investment operations, right, for D'Amelio family funds. To kind of explain your role in this, I find this really interesting, Caroline, at this stage, mid-stage high growth. And we think about the news cycle right now, layoffs across tech, the the higher rate environment. What kind of conversations are you having with those mid-stage high growth companies?
Yeah, great question, Ed. So first of all, to clarify, we teamed up with the D'Amelio family to invest our own capital plus third-party capital into these high-growth mid-stage tech companies. So we're backing third-party founders, again, mostly women and minority founders, as they build their companies. When we look at these types of companies right now, we're pretty focused on making sure they're streamlined and that there's a clear path to profitability. Kind of high burn businesses right now are not in favor. And we kind of keep that in mind when we look at these businesses. We want to make sure they have strong barriers to entry for competitors and an already proven brand with a growing audience. And the idea is once we get involved and the D'Amelios get behind it, we can kind of pour fuel on the fire and hopefully even help them accelerate that growth further.
Your focus areas, B2C platforms, direct-to-consumer retail, EdTech and FinTech. Talk to us a little bit about the FinTech area as we look across the world of cryptocurrencies that is taking such a hit at the moment. Have you made investments there? Are you looking to in any way in the future?
Yeah, so first off, we're betting on tech companies with large audiences, large user groups. If you think about the reach and the brand power of the D'Amelios and eventually other celebrities like them, that's, we think, where we can have the most impact. Again, helping those companies get their products and services in the hands of even more people. In terms of FinTech, we're looking pretty broadly at that. We'll do investment platforms of all sorts, finance platforms. We have done one blockchain-related investment, which was in the company Gemini. It hasn't been a specific focus of ours, but again, if we see a strong, fast-growing business where we think we can help, we'll certainly give it serious thought. I think we're pretty happy, actually, that we haven't been overexposed in crypto and blockchain at this point.
Gemini is quite a big player, right, in the crypto space. Have you had concerns about that investment?
They are a big player. It's a strong company. They've got a strong balance sheet, a lot of cash. We were the first outside money. We came into the first outside round, so I think we're in pretty good position. But it, like a lot of other companies in the space, has certainly taken a hit for the time being on valuation.
We've been focused all day on the Federal Reserve, Jay Powell, the outlook for rates, the macroeconomic headwinds that are hitting a lot of tech. What is your venture capital view of the world right now going into 23?
Yeah, well, we take a pretty conservative outlook at that. Kind of back to what I referred to earlier, we want to make sure that the companies we're investing in are streamlined and ready to survive and even thrive through what could be, a tough set of quarters coming up here. We don't really try to anticipate what's going to happen, at any point in 2023 or even 2024. We just want to back companies that when the dust settles, they're going to be on top and we'll have, great investments on our hands.
Okay. 444 Capital co-founding partner Doug Rennert, thank you. Now, DoorDash is laying off about 1,250 people in an effort to cut costs. That's according to an internal memo seen by Bloomberg. The cuts will affect about 6% of the food delivery services workforce. DoorDash saw its business boom during the pandemic, but it's still unprofitable. And more tech companies lay off employees. The US government is taking advantage, though, of the growing pool of talent. Executives from the US Veteran Affairs Office are on an ambitious mission to recruit top designers and engineers for the agency. But enticing enough workers to jump ship from the private sector to close the gap in government will be a daunting task. Historically, the US government has long trailed the private sector's pay, driving much of the staffing shortfalls. And crypto firm Kraken is reducing its workforce by 1,100 people, or 30%. That's part of its plan to adapt to current market conditions, according to a statement on its blog. Kraken says macroeconomic and geopolitical factors have resulted in lower trading volumes and fewer client signups. Coming up, the latest from Sam Bankman-Fried's ongoing interview. But first,
Yeah, Ed, we take a look at where Snowflake is trading after hours. As shares have tumbled on weak guidance, the stock was already down 53% year to date. It's down now 4.3. This is Bloomberg.
We'll see a little bit of contagion whenever one big player goes down.
I'm sure there's going to be more fallout.
I think we have one more big leg down in crypto.
I think overall, the industry is fine.
Bitcoin is coming out of this smelling like a rose.
Bitcoin fundamentals are intact.
We see the same confidence and the full confidence.
The biggest lesson here is that the value is in Bitcoin and self-custody and not crypto.
I think we're going to see some selling off in Bitcoin.
I think we're going to recover pretty quickly.
We see less volatility than we did in the last bear market.
Sometimes you need to battle test. You need to go through crises.
Many big names talking about crypto and more specifically Bitcoin a bit there, but let's talk about Sam Bankman-Fried himself, the FTX founder, co-founder. An interview being conducted now with the New York Times. Mimosh Nalibasek has been monitoring key headlines extraordinary. The fact that basically he underestimated the scale of the potential crash, he says. Overall, he was not nearly cautious enough on to market some of the tokens on the various platforms. He thinks the US team took some assets offline, and he says there was improper access to FTX post-spiral. What really stood out for you?
There are a few things here. I want to talk about the timeline of events because that is something that Andrew Ross Sorkin is drilling in on very deeply. If you all remember, there was a series of tweets. There was a tweet November 7th that he had deleted about the assets being fine. Now, he did say that on November 6th, he started to become nervous that FTX would not be able to fill customer withdrawals. These timelines are really important here, Caroline, because at the end of the day, and Sorkin also asked this, is his lawyers okay with him being up there speaking about this? This will all be cataloged and looked at the end of the day when you look at what happened here at FTX, both in November as well as the full year. Now, the full year, as far as what he had to say, he's really been trying to draw a very big distance between himself and his role at FTX and Alameda, and is, really apologizing for not knowing and saying maybe he should have known. But Sorkin is also drilling in here very much so on why there seemingly was joint roles when it came to assets that they both seem to have some exposure to. When I say they both, I mean both Alameda as well as Sam Bankman-Fried, who is a large owner of Alameda, as we know. So a lot of questions here, muddy answers, but a lot of questions still to be worked through. This interview is not over yet.
I don't want to give away any of sort of the magic of television, but when Caroline and I were waiting to come on air, there was this question of, is he going to turn up? And if he did turn up virtually. But as you said, he was asked, what do your lawyers think about this? And he said, I probably shouldn't say anything. He is saying a lot of things. And one of the things he's talking about is a term that I haven't heard in a long time, commingling. The relationship, basically, between FTX and Alameda and the crossover of client funds. What was his response on that?
This is a very important response, and I'm reading you the sentence. I didn't knowingly commingle funds. Why is that an important statement? Because at the end of the day, I wasn't trying to commingle funds, he said. I did not ever try to commit fraud on anybody. So we're going to be looking at the series of events as things go on, as well as intent there. So that is something that he had said that day. You were asking about the Bahamas as well. This is interesting. He was asked about why certain Alameda employees had worked together. He had said he had not been living there recently. We don't know how long he has or has not been living there. He had also said that he would not be surprised if sometime I am up there talking about what happened with our representatives meaning U.S. representatives in that statement. He said he has been in the Bahamas for the last year. As we know, though, before this crisis had happened, he had been between the Bahamas and the U.S. He had been in D.C. a lot. I was in D.C. talking to him just weeks ago, really, before this implosion had happened. And he said he'd been running between FTX and the Bahamas, running from FTX in the Bahamas. But he does say that he was asked about his concern about criminal liability here. He said he had a bad month, but what matters here is millions of customers. He did not really give a straight answer about whether the criminal liability is the reason why he is not coming to the United States in person.
Yeah, he says he thinks he could travel to the US. and staying silent won't accomplish any good. I mean, I have to say, I've almost vaguely had a little chuckle about commingling because it came straight after a headline about the fact that a few of them lived all together, and I couldn't work out whether which bit was commingling. But overall, Sonali, do you think it ends up being a wise decision on Sam Bankman-Fried's part to have taken part in this conversation? He overall is saying FTX did unimpactful things to bolster his own image.
I have a lot of questions here again about some of the things he's saying, because on one hand here, you can definitely see him trying to distance himself from the Alameda roles to the FTX roles, which is where the commingling question really comes in. There are a lot of questions here about BlockFi and the collateral between BlockFi and FTX. Again, BlockFi's relationship was both with Alameda and FTX. So what he knew and didn't know, there are certain things he should have known as the CEO of FTX. He's also speaking about the relationship with Genesis as they tried to pull funds as well. So a lot of unanswered questions here, to your point about, you know, when you look back at this, and is he going to be glad if he spoke publicly? On one hand, he's distancing himself and trying to give his version of the series of events here in real time as the bankruptcy is going on in the United States. One really interesting part of this also is Andrew Ross Sorkin asked very specifically about whether he worked with the Bahamas as well when it came to any transfers. And he said he wouldn't answer any specifics of that, but he did point to the fact that Bahamas were a key regulator for them, and as well as the joint provisional liquidators here. So a lot of questions also, not just about Sam Bankman-Fried and his role at both of these places, but also about his relationship with U.S. regulators as well as the Bahamian ones still.
Bloomberg, Sonali Basak, thank you. Extraordinary that SBF talking about how he didn't see the extreme scenarios that played out in markets coming, Caro, which, yeah, I don't think any of us really saw this coming, did we? Either way, coming up, the CEOs of Earn Your Leisure talk about their media platform and the podcast that's selling out venues like MSG. This is Bloomberg.
Most people head to Madison Square Garden for a game, for a music concert. But now they're buying tickets to financial literacy podcasts. Market Mondays, a podcast from the financial literacy brand Earn Your Leisure, recently sold out MSG as well as the Royal Albert Hall in the UK. Earn Your Leisure, or Leisure, as you might say, has more than 2 million followers on social media as the creators interview some of the biggest names in finance and entertainment. Joining us now, I'm very pleased to welcome the CEOs of Earn Your Leisure, Arshad Bilal, Troy Millings. It is great to have some time with you both. Welcome.
Thank you. And thank you for having us.
From our own David Rubenstein, who you've interviewed about building his wealth, to talking about people how to make IRAs and Roths sexy and getting involved your children to invest in them already. Overall, Troy, what are you seeing at the moment in terms of interest in financial literacy at a time where the markets have basically been selling off?
Yeah, we're seeing a peak in it. I think what happened during COVID was everybody was home and, you know, people were losing jobs and they wanted information, and we just happened to be at the right place at the right time with the information to provide to them. So people were investing at record numbers. People were making money at record numbers, and it stayed with them. And that's one of the things we probably put on the forefront is like, we're here for the long term, right? We don't want to just be short-term traders. We want to give you information that you can change your life, but not only yours, but your family's as well.
And I think that your pairing, of course, coming together in 2019, you from an education background, you from a financial background already, you're an independent financial advisor, and been here to Bloomberg in a previous life. Rashad, talk to us about how much the education is working, how much people are willing to remain invested, committed for the long term and not be worried by a looming recession, not be worried about the valuations of some of the stocks they hold now falling.
Yeah, I mean, we always lead with long-term perspective. We always lead with, balance and not a get-rich-quick scheme type of mentality. So I think that the people that listen to us are more calm during this time of turbulence, and they're actually excited because we know that, as an investor, you want to buy low and sell high. So most people do the exact opposite. They buy high and sell low because of emotions. But when you take emotions out of it, then you have to use intelligence. So I think that the people that listen to us have a high intelligence when it comes to investing, and they're seeing this time as an opportunity.
Troy, I want to come to you because you guys are content creators, right? Let's be honest, you're content creators. It's just that, like Caroline and I, you nerd out on finance, on tech, on markets, on long term. How did you guys come up with this idea? Like, where does this come from?
Yeah, so it was originated in the classroom. You know, we started teaching young adults about financial literacy. We were usually doing a summer program, and at the end of it, they were going to make money, right? We were going to pay them. And so we've kind of felt inclined to teach them about money if we were going to pay them. That led to us creating, obviously, social media content, which led to Earn Your Leisure. And so it's always been to teach the youth, but at the same time teach the youth, we realized that adults needed the education. And so that's one of the things we've learned over the course of time is that financial literacy doesn't really have an age, right? Somebody at 11 years old can know something that somebody at 20 years old doesn't know, and somebody at 40 years doesn't know. So we're trying to make sure that it feels encompassing for all ages because everybody can learn.
And Rashad, people like to consume in loads of different ways. I like to listen to you on a podcast. People like to view on YouTube. You like to have real live events, and as you're doing MSG, you're doing at Royal Albert Hall, your own InvestFest, which is over in Atlanta, which is kind of like music festival meets financial literacy. From that point, like, where does your media platform go? Where does your brand go from here? How do you build it?
I think we are building a global media empire, and we're looking to produce more content, even outside of the realm of financial literacy. So a cooking show, a show about children. And I think that people now, they trust us. And that's one of the hardest things to do is to build trust with an audience. So now I think we have the credibility to spread the message of not only financial literacy, but a variety of different things. And on a global perspective, as you said, we just came back from London a few weeks ago. So we're seeing the need for financial literacy and business education all over the world, whether it's in Lagos, Nigeria, whether it's in Kingston, Jamaica, whether it's in London. So this is something that we're very excited about, carrying the flag of financial literacy to everybody that was left out of the conversation globally.
Rashad, I know you're the sort of social media guy for the duo, but Troy, talk to me a little bit about the numbers. Are you monetizing in the way that you expected? How are the algorithms working for you? What do you think about the way in which you can build on social media at this moment?
Yeah, I mean, it's very important. If you don't have social media presence, you really don't have a brand. And so that's something we knew very, very early on. And knowing that, it was like, okay, how do we build? How do we get more people involved? And so we wanted to make sure that the content was relevant. A lot of times we read articles and it's like, all right, this is kind of fluff. We don't really know what's being told. But we made it in a way that was digestible. Yeah. Right? It was something that was spoken in a language that people could understand for people who were overlooked. And so that was pretty much our format. And it's led to us having 1.2 million subscribers, 1.2 million followers on Instagram, over 1 million subscribers on YouTube. We're about to hit 250,000 on TikTok. And so all these avenues of resources that we're using to reach an audience, a global audience, have paid off.
Troy mentioned some of the platforms there. I guess my question, Rashad, is what's the biggest surprise? What have you learned about how consumers are going to get content in this area?
Well, one thing that, is ironic is that the financial literacy space actually booms during recession times. You would think that that would be the exact opposite, but during times of financial hardship is when people take their education more serious, when people invest in their education, and we saw that happen during COVID. I also saw it happen in 2008 when I came in as a financial advisor. I came in at the worst economic time since the Great Depression, and that was actually a good time to start my career because it was easy for me to talk about investing because investments were so low. So we see opportunity in every crisis, and right now, in this economic downturn that we're in right now, I think that is an opportunity to educate, to double down on content, and to spread the message because people need it more now than ever.
All right. Earn Your Leisure CEOs Rashad Bilal and Troy Millings, thank you. The only other better double at Caro is you and I. That does it for this.
Maybe it's equivalent. There ain't no better, I'm not sure. We also leisure and leisure in different ways, at least.
I know. That does it, all of us, for this edition of Bloomberg Technology. Thursday, we have Visa's CFO to share his outlook for 2023 spending. And do not forget to check out our own podcast. If you're busy looking at and listening to Earn Your Leisure, come look at us as well. We're talking all things technology, of course, whether you're online on Apple, Spotify, and on iHeart. So much more to be debating. Go check out the latest from Sam Bankman-Fried. Of course, the interview continues. And at the moment, he's saying he went through a congressional hearing and public comment and still couldn't get to a point of offering futures in the US. Ed, a fascinating conversation. Yeah, so much more to come. This is Bloomberg.